This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, August 28, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is flat at $79,358, but the market is fracturing. Equity volatility is suppressed at a VIX of 15.21, while crypto sentiment has crashed to an extreme 14 out of 100. We are watching a bifurcation where retail is capitulating and institutional infrastructure is expanding. Let's break down the data. First, let's look at the economic calendar for the rest of today. The UMich consumer sentiment data prints later this morning. This will set the tone for risk appetite heading into the weekend. Then, we have the Dallas Fed Manufacturing Survey on Monday, August 31st, and the ISM Manufacturing PMI on September 1st. Both will be critical for gauging whether the broader macro environment is cooling or holding firm.
For the UMich data, watch the deviation from consensus. If sentiment drops, it reinforces the low VIX complacency that is currently decoupling from the crypto fear reading.
Turning to the broader market snapshot, total crypto market cap has contracted by 2.51% in the last 24 hours. Bitcoin dominance is consolidating at 59.15%, while Ethereum holds at 11.2%. We are seeing a clear rotation out of high-beta altcoins and into Bitcoin as the primary liquidity anchor. Total 24-hour volume stands at $92.38 billion. Now to the headlines moving markets. Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Simultaneously, CoinDesk reports that PayPay, the 40% owner of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. And finally, Cointelegraph notes that Bitcoin futures demand has fallen to 2024 lows. The 700% outflow spike is the primary driver of the current fear and greed index at 14. This isn't just retail panic. It is a forced geopolitical liquidity drain. The 7-day trend has risen slightly from 12, but the absolute level of fear confirms that retail investors are exiting positions in direct response to this geopolitical noise.
The futures demand collapsing to 2024 lows changes the flow structure entirely. We are not seeing leveraged liquidation cascades. We are seeing spot-driven deleveraging. The $92.38 billion in volume is being absorbed by spot sellers, not short squeezes. This removes the upward leverage that usually accelerates a bounce, leaving the market to grind lower on spot pressure.
The PayPay IPO is a positive for regulatory legitimacy, but it does nothing to stop the 700% liquidity drain. The VIX is at 15.21, showing equities are completely ignoring the idiosyncratic tail risks destroying crypto sentiment. You have a dangerous disconnect. Equities are complacent, but crypto is pricing in maximum geopolitical risk. That divergence is a risk flag, not a buying signal.
Let's start with Bitcoin. It is at $79,358, down 0.4% on the day, testing critical support near the $79,000 level.
The chart shows technical exhaustion at this node. We have a minus 0.4% decline despite $92.38 billion in volume, which indicates a lack of bullish conviction. The structure is range-bound with a bearish bias. The $79,000 support is being tested by inertia rather than organic buying pressure. We are seeing a classic consolidation pattern where the price is flatlining at the lower end of the 24-hour range, which has a low of $79,061 and a high of $81,282.
That flat price action aligns with the futures data. Institutions are hedging rather than accumulating. The collapse in futures demand to 2024 lows means there is no leveraged buying power to push price above the $81,282 high. We are in a spot-led deleveraging phase where the market is finding a floor through absorption, not demand.
Do not mistake this absorption for stability. The 700% Iranian outflow is a direct liquidity sink that suppresses price discovery. With futures demand at 2024 lows, there is no upward pressure to counteract the spot selling. The technicals look flat, but the flow data shows liquidity is actively fleeing, not accumulating.
Moving to Solana. It is at $104.88, up 0.2%, acting as the only major altcoin in positive territory.
Solana is the sole outlier in positive territory, up 0.2% while the broader market cap is down 2.51%. Technically, it is holding the $104.64 support level, which is the bottom of its 24-hour range. This relative strength is a key structural signal. If Solana breaks below $104.64, the entire altcoin sector is technically compromised. The chart shows a tight consolidation pattern above $104.64, suggesting buyers are defending this specific node.
I challenge the idea that Solana is a safe haven. It is up 0.2% in a market where Cardano is down 2.2% and NEAR is down 2.55%. This relative performance is likely a liquidity trap. Without broad altcoin strength, Solana's isolation is a warning sign, not a strength. The rising Bitcoin dominance to 59.15% confirms that capital is fleeing mid-caps, and Solana's current level is just the last stand before a broader breakdown.
The flow data supports the liquidity trap view. We are seeing a rotation into Bitcoin and yield-focused assets, not into speculative layer ones. The institutional capital is bypassing high-beta alts entirely. Solana's volume is not showing the same institutional accumulation signals we see in the tokenization narratives, making its relative strength fragile.
Next, Cardano. It is at $0.20, down 2.2% on the day.
The technical structure is weak. Cardano is trading near the bottom of its 24-hour range, which has a low of $0.20. There's no volume confirmation or price stabilization at the $0.21 level. The chart shows a clear downtrend with lower highs and lower lows, indicating that sellers are in control. A bounce would require a retest of the 24-hour high at $0.21. But the momentum is heavily skewed to the downside.
The U.S. Senate housing bill includes a CBDC ban, which is a significant regulatory headwind for centralized exchange narratives, but it is a positive for decentralized alternatives. However, the market is currently pricing in maximum fear. The 700% geopolitical outflow is overriding any regulatory catalyst. Cardano is being sold as part of a broad risk-off sentiment, not just because of the CBDC ban.
The extreme fear reading at 14/100 is being driven by this broad risk-off sentiment. Cardano is down 2.2% as part of the minus 2.51% market cap contraction. Retail is capitulating, but the 7-day trend has risen from 12, suggesting that the psychological bottom for sellers is being tested. However, the geopolitical noise is prolonging the distress. Let's look at Uniswap. It is at $4.60, up 1.86% on the day.
Uniswap is showing isolated strength, up 1.86%, which aligns with the institutional yield-seeking behavior. We are seeing capital rotate into yield-focused assets and tokenization narratives. Bitfinex is reviving tokenized bonds targeting crypto-native yield seekers, and TD Securities identifies NYSE tokenization as a critical institutional turning point. Uniswap is benefiting from this structural shift, as it is a core component of the decentralized finance yield infrastructure.
Technically, Uniswap is trading near the top of its 24-hour range, which has a high of $4.84 and a low of $4.48. The chart shows a breakout pattern above the $4.48 support level, indicating that buyers are stepping in at higher levels. The relative strength is clear, as Uniswap is one of the few assets in positive territory.
The institutional narrative is strong, but the broader market is in extreme fear. The 700% outflow spike is a liquidity drain that affects all risk assets. While Uniswap is up 1.86%, the overall market cap is down 2.51%. The bifurcation is real. Institutions are building infrastructure, but retail is fleeing. This creates a fragile environment where isolated strength can quickly reverse if the geopolitical noise intensifies.
To synthesize, we are watching a market bifurcation. Grid flagged Bitcoin's technical exhaustion at $79,358, but CIPHER showed that spot-driven deleveraging is replacing leveraged selling. Pulse noted the 700% geopolitical outflow is driving the extreme fear reading, while SPECTER warned that the VIX complacency is masking real tail risk. The data shows a clear rotation from high-beta alts into Bitcoin and yield-focused assets like Uniswap. Key takeaways from today's session. Bitcoin is testing $79,358 support amid a collapse in futures demand. Solana is holding $104.88 as the primary altcoin strength anchor, but faces liquidity trap risks. Uniswap is up 1.86% as institutional capital rotates into yield narratives. The market is bifurcating between retail capitulation and institutional infrastructure expansion. Thank you for joining ShadowQuant Crypto Edition. Tomorrow, watch for follow-through on the Iranian outflows and the Dallas Fed Manufacturing Survey on August 31st. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.